Hello and welcome. This is BQ Prime. I am Agam Vakil, and we are taking a look at the quarterly earnings of Zaggle Prepaid Ocean Services Limited. Well, it's been a good quarter at the moment, and we're seeing good growth coming in as far as your year-on-year is concerned. We do have a little bit of a contraction as far as your reported EBITDA margins are concerned, but based on adjustments, we're seeing an improvement there as well. To take us through the quarter gone by and what we can expect going forward, we're in conversation with Avinash Godkhindi. He is the co-promoter, MD, and CEO of the company. Avinash, good afternoon, and thank you so much for joining in. To start off with, let's talk about the quarter gone by and what's driven growth as far as this quarter is concerned, and what are the factors that have contributed to the profitability.
Good afternoon, Agam. Thank you so much for having me on the show. Appreciate it. So basically, the quarter is, first of all, this is the Q1 of this financial year. I want to highlight that to your viewers. And growth was driven largely by traction that we got in our corporate credit card programs. We launched Zoyer, which is our accounts payable platform, and we saw traction there. As well as growth in addition of clients. So we grew a decent number of new accounts we added, and that helped us grow about 34% year on year in the June ending quarter ending June.
All right. So Avinash, I want to talk about the seasonality aspect of the business. Among your segments that your businesses and the segments that you cater to, what has contributed to growth at the moment, and could this constitution change from quarter to quarter based on the demand from customers? So the reason I'm asking is that we have a festive season coming up, which may actually lead to a lot of the employers perhaps demand for more of those prepaid gift cards from you. So how does this equation play out from quarter to quarter? If you could just further elaborate on this.
Sure, Agam. Basically, what happens in our business is that because you're dealing with employees and channel partners of various enterprise and mid-market customers, these users spend when they get either an incentive from their employer or when there's a reimbursement that needs to be processed. Now, the reality of it is that a lot of the reimbursements, a lot of the expense claims tend to be made later in the year. Even if the employee has incurred the expense, there's generally a time lag in the beginning of the year. As the year progresses, especially in Q4, when the employees tend to make their tax-saving investments, etc., there's a renewed urgency to complete all your claims. The company finance policy also dictates that you submit all claims before, say, 1st of February or 15th of February or 15th of March, so that the claims can be processed. So we've always seen this seasonality in our business that Q3, Q4 constitute to about 60 to 65% of our revenues, and Q1, Q2 contribute about 35 to 40%.
Right. Avinash, could you also take us through the prospects of your software as a service business? This is when it comes to expense management. What proportion of your revenues come from here, and what is the scope? What kind of growth can we expect going forward?
So overall, if you look at our SaaS revenues, Agam, the way we look at it is not in isolation to our transaction income. The value proposition to a corporate is a combined offering between the software as a service, the SaaS fees, as well as the SaaS platform, as well as the card, which is either a corporate credit card or a prepaid card. And when I say a card, the form factor could be anything. It could be a virtual card, it could be a key fob. So we look at the revenues holistically. Having said that, the SaaS revenues themselves have grown well. They've grown about 8%. And overall, if you look at the combined revenue growth, as I mentioned, it's about 34%. The reality of it is, in India, with enterprise and mid-market customers, they look at how can they get the best deal And we also are able to offer that because we are providing a bundled solution where you're bundling both the software along with the payment instrument. So we monetize both ways, and that allows us to give them a very attractive deal.
All right. Well, going forward, Avinash, you guys used a part of your proceeds from the IPO to lower your debt. Going forward, are you expecting, based on the kind of investments that you guys have earmarked, are you expecting debt to move higher, or this is it? You guys are okay with the current debt levels? Based on that, could you also further tell us about the kind of investments that you are going to put into the business, and what areas will these investments go into?
Sure. So we retired about 47 crores of debt post the raising the capital in the IPO, and that would help us reduce our debt costs. Our Q1 debt cost was about 4.4 crores, and going forward in Q3, you would see those costs come down by as much as 50%. So that would be somewhere in the range of 2.25 crores or thereabouts. Right? So that's a direct bottom line benefit that we get. As far as it goes to investment, of course, we're investing in retaining and acquiring new customers. We are investing in our tech platform. We just recently signed up a contract with Bank of Baroda Financial Services Limited, which is a credit card arm of the Bank of Baroda, the bank itself, for onboarding of their customers and other value-added services, which include providing spend analytics to corporate customers of Bob, for them to be able to track their spends on the corporate cards. So let's say a company has 100 cards that are given out to employees. They are able to, through our platform, actually assess how much was spent in each category. How can they optimally make sure that those spends are deployed optimally? So there are a lot of these initiatives that are coming in. We also launched a co-brand corporate credit card with Yes Bank, and that's again a very important product for us.
Right, fair enough. Avinash, final question then. If you could just give us an outlook for the business going forward. How do you expect FY24 to come through? If you could give us, some sort of expectations on the numbers, even if you can't give us an exact number. We've seen a good 34% growth in terms of your revenues year on year. I reckon that your ESOP, expenses won't be around in the coming quarter. Please do correct me if I'm wrong. What are your expectations on margins as well going forward? What's the view here?
So overall, we are looking at a growth of about 40 to 50% in revenue year on year, at a EBITDA, adjusted EBITDA of about 11 to 13%. Right? ESOP costs would be there, Agam. This year, overall, FY24, we would have about 20 crores of ESOP costs. We've already taken about 5.8 of that in Q1. And ESOP costs were there in FY23 and FY24. FY25-26, they taper down significantly. Right? So these are the 2 years where we have taken a lot of ESOP cost. Last year, it was about 14.5 crores. This year, it would be somewhere in the range of 20 crores. But, the revenue growth is strong, 40 to 50%, and adjusted EBITDA would be about 11 to 13%.
Okay, Avinash, we leave it at that. Thank you so much for joining in and taking us through the quarter's results as well as the outlook for the company. We wish you for the best.
Thank you so much, Agam. My pleasure.
Thank you.